Welcome, everybody, to the newest episode of the Orange Wheel podcast. Today is March 3rd, 2026. I'm Ted Paulus, CEO and co-founder of Orange Wheel. Today, we're diving into one of the most polarizing topics in tech and energy. It's about Bitcoin mining, of course. And for years, the mainstream narrative amongst most of the media has really painted Bitcoin mining as an environmental villain, often considering the energy as being wasted. So we're going to kind of dive into that topic and try to demystify some of those claims. Before we start, just kind of set the stage. I'm joined by a really strong panel today. Amos Ben-Dor, Alexander Neumüller, and Thomas Julsgaard. They're all active participants in the Bitcoin and crypto space. So we, of course, recognize that we come with our own biases. And of course, we're going to try to take these argumentations against Bitcoin at their best face value. But of course, this is really an exploration of the data from within the industry as opposed to a debate of skeptics against proponents. So of course, in the future, we're welcome to host any skeptics who wanted to debate any of us as well, but today we're going to try to take their arguments and steel man them to the extent possible. So our panel again, we have Alexander Neumüller. Alexander's a research lead for digital assets, energy, and climate impact at the Cambridge Center for Alternative Finance. He's the lead editor of the annual Cambridge Digital Assets Mining Report and maintains the Cambridge Bitcoin Electricity Consumption Index, the CBECI, which has become kind of a benchmark KPI in the Bitcoin mining space. Thomas Julsgaard is an energy and digital asset specialist along with me at Orange Wheel. While he works on the practical integration of flexible loads into modern energy grids and focuses on the economic and technical viability of using digital mining to balance supply and demand for renewable heavy environments. And Amos Ben-Dor, joining us from the UK. He's a procurement and supply chain professional with a deep interest in the intersection of Bitcoin and environmental sustainability. Recently authored a paper exploring how Bitcoin can serve as a catalyst for the energy transition by monetizing excess renewable energy and reducing carbon-intensive waste. So basically, the critical responses to that paper that was published back in November by Amos is kind of served as the basis for today's discussion topics. And then lastly, before we kind of dive into it, of course, we have to acknowledge that there's probably some listeners out there who come with the mindset that Bitcoin itself is not a positive influence on society. And for those listeners, we're probably not going to sway them today, but really, I think the focus will be on those that are Bitcoin curious or Bitcoin crypto neutral to help them get a more broad and holistic perspective of both sides of the argument. So we're kind of focusing more or less exclusively on the technical, societal, and environmental impacts of the Bitcoin mining process, how it interacts with grids, handles waste energy, and ultimately interacts and influences with the green transition. So with that, all those caveats out of the way, we'll just kind of start here with Amos. Your recent paper highlights a staggering figure. In the UK alone, they spent £1.28 billion in the first 11 months of 2025, paying energy producers not to produce energy. So let's start there. For those unfamiliar with the process, how does Bitcoin miner turn this type of waste electricity that is basically turned off from power producers into some sort of opportunity?
Thank you, Ted. I appreciate you inviting me onto the podcast. It's really good to be here today. So Bitcoin mining can take the excess electricity, which would otherwise be wasted or curtailed by the energy grid operator, which could be either because there's a lack of demand for that excess electricity or because the energy grid infrastructure simply can't handle all of that renewable energy. So Bitcoin mining can take that and monetize it, use it as a power source for its mining operations. And this monetization of the excess electricity actually serves as a new revenue stream for the renewable energy producers. So it ends up being a win for the miners and a win for the energy producers who can ultimately become more profitable out of selling their excess electricity, which no one else wants. In terms of opportunities more broadly, in order to support the green energy transition, in my view, we need to have more consumption of the right kinds of electricity. And this often goes against a traditional environmentalist perspective, which is that in order to save the planet, we need to reduce our energy consumption, which I'm somewhat empathetic with that viewpoint. It's counterintuitive to suggest we need to increase our energy consumption. But I would take a more nuanced viewpoint that the critical distinction here is what is the source of that energy and where does it come from? So if that increased consumption comes from coal, for instance, then I would agree that reducing that use of coal to create electricity is going to be a good thing. But if that energy consumption for activities such as Bitcoin mining comes from renewables, increased consumption is a good thing, because increased consumption of renewables ultimately encourages increased expansion of renewables within our energy system. So increased consumption of the right kind of energy is important, in my opinion, and Bitcoin mining ticks that box because, as we know, it is a large consumer of electricity. And the second and final point I'll make just now is that being a high consumer of electricity alone is not sufficient. So the flexibility of the energy user is key as well. And Bitcoin mining is its key superpower, in my view, is its flexibility. And that shows up in many different ways. So, for instance, its ability to turn on and off within seconds, location agnosticism. Bitcoin is global, so it doesn't matter where it's mined. There's no need to be near end users. And also its time agnosticism as well. So the Bitcoin network is 24/7. So where, for instance, there's a lot of renewables, as we know, are inherently intermittent. So all of the supply might be coming at night. That might be when the wind is blowing and the wind turbines are creating that electricity. But if we're all asleep, then there isn't demand for that electricity. So that's when you might see wastage or curtailment. And at least from a UK perspective, that's why one of the reasons why my bills are so expensive is because we're paying to shut off those wind turbines, say at night, when no one else wants that electricity. But because of Bitcoin mining's flexibility, that's when it can step in as a buyer of last resort and buy that electricity which no one else wants. And then equally during peak time hours, when there is demand for electricity, that's when Bitcoin mining can step aside and release that power back to end users. And this is happening quite a lot all over the world already. Like Texas is a great example of where they've credited Bitcoin mining with expansion of their renewable energy systems. Those 2 points in tandem with each other, Bitcoin mining being a high consumer of electricity and B, its flexibility, both of those in combination can be a great asset and offer great opportunities for the renewable industry.
Yeah. Very well put. Thanks for that overview, Amos. And I think it's an understanding that's gradually creeping into the energy industry more generally. And it's good to see it kind of, take hold in places like Texas. Also now in Finland, are they using it for green balancing, and other places here in Europe, it's starting to take off. So thanks for that overview. So with that, I think that kind of lays the groundwork in terms of what the thesis for the benefits are at very high level in broad strokes. And now let's kind of dive a bit more into the criticisms that tend to appear and the responses you've kind of gotten from your paper, Amos. So we'll start off with you, Alex. The first question is about the proof of work mechanism and alternatives to it, and namely proof of stake not being energy intensive. So for maybe uninitiated folks, they might say, okay, can we not get all the same benefits of a cryptocurrency with Bitcoin without having to actually consume all the power in the proof of work mechanism? Why might that argument be misdirected? You're on mute, Alex, I think.
I'm on mute, sorry. So basically, the first I would say, actually, I think it's not fully misdirected, honestly. If we take a step back, so first of all, what problem do we solve? We have this, essentially, we have a distributed system. We have a lot of actors. They don't know each other. They don't trust each other. So how can we all make sure that at the end of the day, without having a central authority governing a ledger, that we still agree on one version, right? There's still one truth, but ultimately we are all different folks. We all not necessarily trust each other. There might be malicious actors. So you need to have some sort of mechanism, an incentive mechanism that helps to kind of incentivize people to not behave maliciously, right? To kind of really incentivize honest behavior. And we have seen this with Bitcoin as the start. And please let me know if I digress too far. But essentially, I think it's a bit of a good start to, utilize in that case, CapEx in the sense of computers, electrical infrastructure, etc., and naturally the electricity as this means to discourage malicious behavior, because ultimately, if you want to propose a block, you have to demonstrate an unverifiable proof that you have spent these resources, right? Because there is, I'm not going now too deep into this, but essentially you need to find a valid hash value, right? That needs to be below a certain target value. I mean, there's obviously a huge thing. There is no single solution. Sometimes it's a bit of a misunderstanding. There is no single solution, right? There's a set of solutions. You just need to find something that's below a certain target value. And that gets mostly over time gotten more and more difficult. And as it gets more and more difficult, right, people might argue that, well, the security is increasing. But ultimately, you need to expand this resource, right? You need to buy the computers. You need to have the access to the power lines, right, to the electric power system. maybe you build your own generation capacity. You need to spend some money from the capex perspective, but you also need the operational perspective, where you need to consume electricity. That was kind of this expenditure, and this kind of anchor to the physical world was really the backbone of Bitcoin security, or generally of proof of work, right? But I think if we think about proof of work, it's mostly Bitcoin, not going into some other chains as well, and how secure they are. But I think for Bitcoin, right, you have this significant kind of infrastructure that is really kind of like the backbone of the network security. And if we think about attacks, you just, you need to build, buy, or somehow achieve, let's say, 51% of the network in terms of hash rate. Like, there's different kinds of attacks naturally, so you may not need to achieve it to sow some doubt, for a very long time, even if it's just temporarily. But still, you need to have. There's no way to fake it, right? So you need to have those kind of computational power to be able to, for instance, meddle with the network if you want to. And just kind of the prospect of cheating in terms of your financial reward might not be that high. We're actually currently writing a report on this. There's a lot to the topic, so I want to keep it at that. But for those who are interested, we will most likely publish in the next couple of months a report on Bitcoin's kind of, like, we call it security budget, also the long-term economics of Bitcoin kind of. And if we think about proof of stake, well, it's a very different. It's basically tries to solve the same problem. It's just a very different approach, right? You still, in that sense, you don't need to. Security is not tied to the expenditure of some physical resource. In the case of proof of work electricity, it's really about collateral. So you need to provide collateral, essentially, if you want to have the right to, for instance, in Ethereum, to validate blocks. You need to provide some sort of collateral, and if you do some shady things, right, basically other network participants decide, well, this validator has done some shady things, so we're going to punish the validator by taking away some of their collateral. So you get kind of punished. So the expenditure in terms of electricity and operation expenditure is very low. But ultimately, to ensure that people behave honestly, this kind of system uses just the by way of collateral, right? So I don't want to make an opinion on that, like what is better, what is worse. I think personally, my opinion about Bitcoin, I think a lot of the story and the narrative behind Bitcoin is kind of anchored to the securing it, having this kind of anchor to the physical world, whereas for others, it might not be so much the case, right? And so I'm not like advocating against proof of work. Personally, I think there is a place for all of those. But for instance, some like proof of work might fit for Bitcoin. So that's kind of my 5 cents on that.
Yeah, and I guess the way I sort of think about this a little bit is that, if you're going to have something that's truly decentralized, that needs to have both the security and the governance and the alignment of incentives, this link to the physical world does become kind of and this need to expend energy and capital becomes a necessity that otherwise, I think, this has been proven through experimentation with other consensus mechanisms that at least through the markets, that it doesn't. The markets themselves aren't willing to put as much of their store of value into it at this stage. Anything you'd like to add to that, Amos or Thomas?
Yeah, I can add something. Alexander already sort of circled around it, but I also see Bitcoin mining as sort of a new paradigm in cybersecurity. Like, instead of focusing on making the computation as efficient as possible, as cybersecurists has done so far, right? Satoshi and I guess also Adam Back with proof of work, they deliberately tried to make it as costly as possible. So in a way, you could say, like, the goal is not minimizing the amount of energy used in Bitcoin mining. It's like focusing, as you also said, on a real world energy expenditure with the protocol. And that sort of linking the security of the protocol with the watts of power, you could say, is to me that's pretty big.
Yeah, super cool. And I mean, I guess that's ultimately what some people start analogizing it as, kind of like a way of storing energy, and saying that Bitcoin is energy backed as a result, right? That as opposed to saying it's not backed by anything, it is actually has this somewhat intrinsic value in the sense that there has been a real physical world unit, whether it be energy or work, that's kind of put into it to quote unquote back it. Moving on to the next criticism. So other people might say, okay, yes, you can use this wasted energy on Bitcoin mining, but these are still scarce resources in a way, even if they are currently being wasted. Is there not other uses for the excess waste power than Bitcoin mining? So with that criticism, Amos, what are your initial counter arguments?
So the way I would see that is the value that Bitcoin adds to an energy network is, I'm going to quote Daniel Batten here, is that Bitcoin mining acts as a shock absorber for the grid. So where there's a bit like what I was saying earlier, so where there's too much supply, so Bitcoin mining can power on and reduce strain on the grid and help grid stabilization. So I think this stems from a point that someone made to me, which is that why would we waste energy on Bitcoin mining when in fact it can go to hospitals instead? I think that was the specific thing said. Bitcoin mining wouldn't take electricity from places such as hospitals because there's an incentive for the miners to buy electricity at the cheapest price possible. Alex, I hope I'm not misquoting your report. I think you've said in it that more than 80% of a miner's operating cost is electricity. There's so there's an incentive because electricity is such a high percentage of an operating cost to buy the cheapest electricity possible. And the cheapest electricity is going to be the stranded excess electricity that no one else wants. And when the demand is higher for electricity, that's when the prices for electricity will go up. And that's the electricity that miners do not want to purchase and which will be released back to hospitals to use. So without wanting to waffle on, that's my summary, essentially.
Yeah, and I suppose, just to add on to that, I guess the proof is in the pudding in a sense, right? If there were more higher value applications for that electricity, they would already be applied to those higher value applications. The fact that nobody's tying into it means, I guess, by definition, that it is indeed waste.
So I'll just say there's an incentive for the miner to buy electricity at the cheapest price, but there's also an incentive from the energy operator to sell it to who's willing to pay the most for it. So there's a dual incentive going on there.
Exactly. And I think you kind of alluded to the next question, but I'll hand it over to Alex. It does say, people might ask, yes, Bitcoin theoretically goes to pick up wasted energy, but how can one actually identify whether or not energy is indeed wasted or stranded? How would you respond to that?
I think mostly by availability. So as you said, Ted, a bit, right? If there is excess supply, and in many cases you see, for instance, there's a very great study by Berkeley, and they show nicely, for instance, how over time the frequency of negative prices in certain nodal zones has developed. So if you see that over time an increased amount in specific region, right, and that you can clearly see it, West Texas, where you can clearly see kind of the frequency of negative prices increasing, then that is a clear indicator of an excess supply that nobody is using, right? The reason why, I don't know. It's just maybe most likely the business case is not there, because as you alluded, if the business case is there, someone would try to use it. And I think that's kind of what we're seeing, because so there is obviously a lot of different things you could do with, whether this is from hydrogen production, batteries, but it's really about like a locational assessment, what makes sense. As Amos said with the hospital, right? It's like if there is a huge excess supply somewhere in West Texas, it doesn't really help you in a hospital in Austin. There's transmission constraints, there's all kinds of different things. So you can say, well, if there is an excess supply, there is currently no activity that some people might perceive more valuable. I'm not going to make any value judgment there, but if there is basically, and sometimes people refer to miners as kind of a load of first and last resort. So last resort, because obviously we talk about the absorption of this excess supply when we think about stranded. In that case specifically, we talk about stranded renewables, right? Wind energy, you have the same in many other regions with hydropower, where you just have, whether that's from Ethiopia, even like Russia, and the kind of in the earlier days, right, of mining, where you have huge infrastructure developments that were in Russia, specifically from the Soviet Union, right, on the aluminum in this kind of Siberian regions, aluminum production, etc. You have all the infrastructure really there, just not really used. And same in Ethiopia, right, there's this huge dam, there's a lot of generation capacity, but it's just the demand is just not there. And then it's like, okay, what do we do? And in terms of capex, I think when it comes to business case, mining is just kind of attractive for these cases where, okay, you can build it usually quite fast, and the capital expenditure that you have for the machines themselves. I mean, I think we moved away from this really like warehouse shoebox kind of like chicken farm things. It's now, I mean, some of the data centers are now look more sophisticated, right? But it's kind of some people call it, for instance, T0 data centers or something like that, right? Where it's not, you have containers as well. You can transport them to wherever it's needed quite quickly, right? And so it's, if you want to place some load somewhere quite quickly, and for instance, behind the meter, which is, I think, what we want to do in many cases, then it might be a natural kind of absorption mechanism of excess supply, because you have, for instance, a producer that says, well, even if it's not, maybe we talk about this later as well, but the different mining strategies, right? You don't have to mine 24/7. You can say, well, we just really focus on specific times during the day where we want to capture lower prices and have some PPAs in place or whatnot with, for instance, some producer or some agreements or whatnot, but really capturing, for instance, availability of like 20-30% or whatever when you think about solar, wind, etc. So there's a lot of different use cases, and as was also said earlier, you can basically, the opportunity cost of not mining is just the lost revenue from not mining, right? Lost Bitcoin. There is, if we not include any sort of contract you have, for instance, with customers or whatnot, But if you're just a mining company, essentially, it's not like a cloud storage or whatnot, or AWS. If that goes down, it's going to be an issue. I mean, you have availability, you need to have a lot of redundancy, you have all these kind of things. We don't need any of that for mining. I mean, this is just basically from standard renewables, but then there is obviously other examples, and you can't just build quickly some hydrogen production facility somewhere, right? The supply chain is extraordinarily complex, and you just need something that fits. There was to talk about briefly, and then I'm going to stop, about the first resort, because there has been a research paper. I forgot the university and the researcher by name, but basically what the researcher was arguing essentially was that you have interconnection queues, right? So you have your wind farm, your solar farm or whatnot, and you might have it finished, everything is production ready, but you're still not allowed to supply electricity to the grid because you're still in the interconnection queue. But everything else is ready, right? So you could already produce. It's just basically, you have to wait until your time comes. And what they argued was, well, in the meantime, you could already start placing some containers next to those facilities and already start producing, right, in service, for instance, mining load, right? Because ultimately, a bunch of containers, there is no need for very sophisticated fiber connection or whatnot. I would say comparatively simple to set up. They're like very niche use cases. I think it really comes down to the comparative simplicity of starting mining operations compared to any other, let's say, accelerator, specific computing and those sort of things. So I think it has a very location agnostic, as I said before, right? You can set it up pretty much now with Starlink as well, right? So you don't need any sophisticated fiber access. So I think it has really its place somewhere. It's not the only solution, right? But it has, I think, its place as part of a more broader set of solutions to kind of not just deal with excess renewables, right? But specifically when we talk about flare gas and these sort of things, we have gas flaring is a huge issue, and how you can, for instance, try to utilize this really kind of just wasted energy for something, whether you deem it useful, whether you don't deem it useful, but at least some sort of economic activity. Yeah, but that's kind of, again, my 5 cents on this.
Yeah. No, you covered a lot there, Alex. I mean, answer the question in that
Sorry.
sense. That's great. No, it's good. But I think ultimately, I think you explained quite well also that, when there is price signals, I guess, available, if it's grid connected, that low prices or zero prices would indicate waste. And I guess then there's stuff that's not really grid connected yet that is a little bit more hard to identify, but I think you gave a very good explanation there of the instances and how Bitcoin mining can fit in there. We'll move on to the next question. Thomas, we'll start with you. So some people might claim, okay, the real problem is actually a lack of infrastructure, i.e. we need more capacity in the grid itself. And that way we won't have to suffer curtailments because all electricity that's produced at all times will be able to flow through the grid. What's the reason that is not necessarily the most optimal solution?
Yeah, good question. So I think at least I could speak for the Danish context, right? Because that's where I'm mostly situated. I think in Denmark, it's not really a lack of transmission that causes these problems. The country is already highly interconnected, also with the other Nordic countries as well, right? So the challenge is more the challenge lies in the success of the renewable energy sources that we've put into the energy mix, right? Not that it's good that we did that, right? but it does introduce a lot of like variability in energy production. So the issue isn't like, you could say it's not the infrastructure or the transmission. It's that we need to keep the energy grid like
so
at,
maybe
like, a stable
not
value,
so much
right?
transmission capacity as it could also be. Maybe some people are thinking batteries as the solution instead, right? Just store as much of the electricity as possible in batteries. So in that case, why might that not necessarily be the best either?
Well, to be honest, batteries, they're pretty like special case. Like batteries are pretty good, but one problem with batteries is that they're super expensive, right? And they also have wear and tear, just like a lot of other software has, or like hardware. But yeah, I think in the future, if we're able to like develop on the battery technology, it will definitely be like a big competitor to Bitcoin mining, right? It does solve some of the same issues, but as of now, Bitcoin mining is probably, in my opinion, the best solution to balancing the grid.
Or a combination of batteries and miners. But yeah, Amos, anything else to add to that? You're also now
You're muted.
We're all each have our turn here on doing that.
There's always someone. Yeah, I definitely think infrastructure improvement, so grid infrastructure and batteries can play a role in the future, but the key point is that they're not ready now. So they require a lot of investment, which, well, speaking from a British perspective, we're pretty broke as a country, so we don't have a lot of money to fund basic public services. So funding grid infrastructure takes time and it's expensive as well. Bitcoin mining can certainly be an interim solution, because of that monetization of the excess electricity. It can pay for grid upgrades. So that's what certain countries in the world are doing. Ethiopia, I believe, is one such country I talked about in my paper, where they're actually expressly saying Bitcoin mining is temporary. We're just using it to pay for our grid infrastructure. So, so that's one aspect of looking at it as well. And batteries, I definitely think batteries obviously have a role to play, but the obvious thing about batteries, unless I'm mistaken, because I've not looked into this professionally or academically like Thomas, Alex, or yourself, Ted, but batteries obviously have to release the energy back into the grid at some point. They can't hold it indefinitely. The longer they hold electricity, the more leakage there is, and eventually that electricity has to be discharged. So although they can somewhat act as a shock absorber for excess electricity, there's an inherent limit to that because of the nature of how batteries operate. Although I think they can complement Bitcoin mining, and neither are going to outdo one another entirely, but Bitcoin mining, in my opinion, has key strengths that batteries will never be able to replicate.
Yeah, or like preliminary conclusions from some of the modeling we've done has kind of shown that you get an economic optima that's higher when you actually combine both solutions when co-located at a renewable site than either one or the other alone. So we definitely see some kind of complementarism under certain conditions there. And I guess also, batteries themselves do also have environmental impact when they're being, the chemicals that go into them and so forth, and the disposal. It can be quite intensive in many regards as well.
Huge.
But Alex, anything you'd add on?
Minerals they require as well. And the rare earth minerals they require as well. I think the cobalt, is it nickel as well? Obviously all technology has a resource, takes resources, but batteries, I think there's a significant environmental cost to producing them.
Yeah, certainly. Alex, anything you'd add on to like storage as a solution or grid infrastructure versus vis-a-vis Bitcoin mining?
Yeah, I think it's for me there's a bit of two different things. Where a battery, it's a kind of storage, it's an energy storage, whereas Bitcoin is not really it's not really energy. You don't store energy, right? What you can do, you can, for instance, function as a sort of virtual power plant where, from a grid operator perspective, you are essentially a resource that they can access very quickly, but not by increasing the supply, but reducing the demand. You have usually on the supply side, you have peaker plants and these sort of things. So gas turbines, usually you can ramp up very quickly. You need something that you can, if there is a heat wave or whatnot, something, goes offline or something happens, right? Some sort of event happens that kind of causes issues, and suddenly you have a drop in supply. You need to do something, right? You can say, well, there's two kind of ways. One is the supply side, you increase supply to make up for what was lost, or you look at the demand side and say, well, you can power something down, which effectively has the same effect, right? From an operator perspective. And if you have those resources where I say, well, and this is why I think that the best example here is really ERCOT in the US, in Texas, where if you work with, and there's like gigawatts participating in this large flexible load program, that they can act and say, hey, when something happens, and we have seen this very recently in the cold wave, And we saw this not just basically by those announcements, and we saw this even when we looked at block times, right? Suddenly we had this, like, I think the largest difficulty drop in the Bitcoin network since I was like 2 years. I really please don't quote me on this, but it was since a very long time where you could really see, I mean, you could see this by on-chain data, that these kind of things happen at scale. And you see this also in the ERCOT presentations where they clearly show, okay, we have this large flexible load. This is kind of how those reacted. And you can clearly see that load is dropping significantly before they get a request, right? You can see as soon as the price is moving, as soon as there's some price signals, they start even before a request, right? Because at some point you're like, okay, I'm not going to mine Bitcoin at like 15 cents per kilowatt hour. So even before you're going to see load dropping, but naturally if the signal is coming, then they have still like a resource. So even before that, it's very interesting what is happening there. And I need to be fair, I'm not like too involved in the European, even myself being an EU citizen, but I'm not too much involved in the European. I'm sure we're going to see this kind of specifically when it comes to how do you integrate this new technology into the electric power system. We're going to see this a lot more because electricity is generally much more expensive here than in many other places. So you need to find ways how to integrate yourself better, and not just in the electric power system, right? I think specifically in the EU, when we think about the energy system more broadly, maybe we speak about this later. How do you utilize, for instance, waste heat and these sort of things, and how can you monetize these byproducts essentially, and how can you provide this auxiliary service? So, whereas batteries it's a bit of a different business model, right? Essentially, if you have utility scale batteries, then you try to use excess supply during certain times and then give it back during times when it's more needed. But we saw actually, interestingly, quite a drop. I think it is in the US. I'm not quite sure if it's the US in general, or if it's just ERCOT, in new applications for basically battery connections. A huge drop, actually. I think this quarter or last quarter, because ultimately, the more people trying to kind of do this temporal arbitrage, essentially getting electricity when it's cheap and then giving it back when it's more valuable. Still, like, the more competitors are there, right? This will also impact the price,
itself, right? You kind of like
so.
merchant is kind of like
So that's another question, right? But yeah, again, I see this kind of battery discussion. It is naturally relevant, right? Because you can kind of store energy and then give it back when it's more needed. Specifically, when we think about duck curve, etc. In some countries, it's quite stark. But yeah, I think for me it's a bit two different things. But yeah, they do have some commonalities as well.
Great, and it's definitely interesting to see what's happening in ERCOT and seeing that model be able to be applied elsewhere to really incentivize the energy companies to kind of optimize what they can. Okay, next topic, and we'll start with you, Thomas, on this. So some people might say, okay, flexible loads, there must be other flexible loads out there. We hear a lot about power to X, for example, generating hydrogen using electrolysis. Can that also not be mobile, location agnostic? Can that also not be positioned on site and co-located where the excess power is generated? Or are there other such loads that could be used instead of Bitcoin mining? Any perspectives on that argument?
Yeah, definitely. And I also think Alex was saying on it a bit before, but the fact that Bitcoin is so modular that it is, or Bitcoin mining is so modular that it is, I think is one of the largest strengths of it. So it basically makes everyone with renewable energy infrastructure able to mine Bitcoin, right? Or expend the energy that they otherwise would have curtailed. So yeah, I think that's one of the main points. Another point, at least for like a Danish context, is that I know for a lot of the like power to X plants that has been planned and being built, there's a lot of resistance from the like local communities, and that's something I think would be easier to avoid with Bitcoin mining. One point is that it's transportable, right? Let's say we have it in containers, then it's not like a permanent plant. And also in general, I guess it depends on like the scale of your project, but it is able to like be smaller than like large plants that you want to build. So yeah.
Yeah. So I guess some of these other options, you really need to have a certain size for it to really make economic sense. Whereas Bitcoin, you can go in with 0.5 megawatt, 1/4 megawatt, in some cases, really small applications for small purposes.
And one other point is also that Bitcoin mining will be able to like bid into the ancillary services markets a lot easier than some of the other like alternative competitors of energy. Like batteries will also be very competitive on that front, but my guess is that like desalination plants or power to X plants.
Yeah, the interruptibility is not quite the same, and the speed of response is probably not the same either. Amos, anything else you'd like to add to that?
I do agree with you that their interruptibility and speed of response isn't equivalent to Bitcoin. So talking about things like hydrogen, you say electrolysis, or desalination plants, I don't deny that these can play a role in grid response systems. So in the Gulf states, for instance, they rely massively on desalination plants. So sure, I don't see why they can't be a consumer of renewable electricity, but with the limitations I mentioned earlier, you mentioned earlier as well, hydrogen desalination plants, these are not location agnostic response systems because there's a requirement for them to be nearer to end users. And they also have, essentially, so they don't have the location agnosticism as Bitcoin mining does. And the other one I want to talk about, I wrote about this in my paper, but also it's further response I had in some of the feedback points is that AI can be used as a demand response. And that's also what the UK government is thinking as well. Again, I'm not saying it can't play a role. Indeed, I've heard stories about how it already does. But I don't think it offers the advantages of Bitcoin mining, in my view. So the reason for that is that because AI is an inflexible user of electricity. So high levels of uptime are required to respond to levels of customer service that are expected. So for instance, during the day, there's going to be a lot of ChatGPT requests, and AI data centers or high-performing computer centers don't have the flexibility to power off when demand is high. So my understanding of this, and I would like to be corrected if I'm wrong, but because it's an inflexible user of electricity, and importantly because it peaks as well, because you might have times with lots of ChatGPT questions, as a grid operator, if you're planning what are the peak requirements of the grid, if there's more inflexible users of that electricity with higher peaks, you have to account for that with greater levels of baseload energy. So baseload energy, I mean energy sources which are constant and reliable, the opposite of the intermittency of renewables, so things such as coal and gas. The more inflexible users on the network, the higher levels of baseload energy are required, which are fossil fuel based. So rather than AI data centers being a tool for grid stabilization, actually, in my opinion, they encourage the use of fossil fuels because of their inflexibility and higher levels of baseload energy required.
Yeah, no, that makes sense. I guess nuclear can also be an option, which is not fossil fuel,
Sure.
It's still baseload. But no, I think that's the point taken. If the goal is both low carbonization and stability, it makes it a bit more difficult to have non-interruptible sources with variability in terms of its demand. Totally makes sense. And I guess I hear about some people, and maybe Alex, you have some comments on this, about the combination of both AI and Bitcoin mining together, if there's some sort of synergy there, in the sense that if what Amos is saying is that there's going to be peaks in demand on the AI compute in any given facility, can it make sense that Bitcoin modulates to kind of fill that buffer so that there's a constant demand draw at any given time? Is that something you've heard much of in your experiences so far?
Actually, it's quite an interesting topic. So basically, I don't think it's deployed a lot or at all. I'm not quite sure. I just spoke very recently with someone from the industry about this, because ultimately what you have is for instance, an inferencing workloads and these sort of things, right? But maybe talk about edge computing, and the utilization, it goes like in waves, right? You have those valleys, and then the peaks, and it goes like this, right? So the question is, and this will, I think, be in the future a lot bigger question when you get more and more kind of these AI workloads and everyone experiencing these kind of variabilities, where suddenly it's a utility company, someone at some point needs to manage those variabilities. And if you say, well, you're a large consumer and you go to a utility company and you say, well, I'm going to need like 200-300 megawatts. But, my load utilization will be like this. It might not be particularly at some point, right? And if many do that, they might, because someone needs to manage and make sure that there is a stable frequency on the grid. So then you have all these different consumers having all kinds of different load profiles. So if you can say, well, I'm a large consumer, I want to have like a big contract, 200-300 megawatts, but I can ensure that we have a constant like power draw, essentially, very low variability. We can demonstrate that by, for instance, using in that case, Bitcoin, because you can pretty much, if you have this, systems in place, you can ramp up production if, let's say, inferencing workloads fall down, and then ramp down if inferencing work, because you obviously want to serve inferencing work because you get a lot more money for that. So, but for the rest, right, you can balance with kind of mining. So you can demonstrate to a utility company and say, hey, we actually manage this variability on our side, instead of like having the utility company or, depending on the jurisdiction, how things are set up, but someone needs to manage that at some point, right? But if the company says, well, we pretty much have a very constant draw and we manage those things on our end, that might be beneficial, I guess, possibly at some point. But I need to be fair, I haven't really heard too much about it. It's something I have been looking at some point myself to some extent, but I haven't really read a lot about it as well. So I think it's very nascent, but this might be where we see more like this kind of complementary nature of accelerated computing workloads and mining, right? Because usually sometimes, maybe not so much now, because I have my personal opinion of mining is going at some point, but basically because ultimately you, as a competitor, you cannot on price compete with AI. They are just willing to pay a lot more for electricity. So I see in the future also mining being just not by trying to be like socially responsible or whatnot, but I think out of pure necessity, they have to integrate more in the existing power system. Like, how can we utilize the wasted? How can we provide auxiliary services? Like, let's utilize, some stranded renewables at some place where there's just nothing else. And, otherwise it would either be like some dummy load where it would just be curtailed or whatnot. Like, how can we leverage those? I don't see them necessarily over a long time, really just on a 24/7 uptime, like 99% uptime basis, competing with AI data centers, right? Because, or I said in the beginning, right, you would not build a mining facility in the middle. I mean, for many reasons, but like also from a price reason, you would not build them in the middle of a large metropolitan area. It's just not nonsensical because the cost is just too high. So you need to find this niche opportunity. And I think this is what we see in the future. We will see more and more, where miners really will have like some sort of some sort of specialization, right? Where they are like, okay, we provide auxiliary services, so we get paid for providing this valuable resource to grid operators. Others say we're gonna be like somewhere in no man's land where there's some excess, right? Where nothing else makes sense. Others say, well, we're gonna be on an oil field and try to utilize otherwise. I think this is kind of where mining and more going in the future. So I think we will move away from this like kind of 100% uptime kind of. I think we already see that, but I guess move more and more away from that kind of business model.
Yeah, that's great. I mean, I will have to have you back on in another episode dedicated towards kind of the future of Bitcoin mining, because I think right now there's a lot of, the big Bitcoin miners are all pivoting to AI because, as you said, that's where the profit margins are. Makes sense. But then what does that mean in my mind, also for network difficulty? Are they not going to invest in Bitcoin chips anymore? Are we actually going to see difficulty plateau or come down? Where will we see the growth? I think these are all really interesting questions to investigate further. So that's a topic for another time. We have a couple more questions before we sign off today, getting towards the end of our recording time. So we'll do kind of something of like a rapid fire here. We have 4 last questions. I'll just say it. Whoever wants to grab it can grab it and then respond within, let's say, 30 to 60 seconds. And then we'll move to the next question. So so we'll try this format out and see how it goes. So first question, using miners as heaters, that's another thing we start seeing where you can get like value from the Bitcoin mined, but also the heat as the byproduct. So there's interesting applications in this instance, but a counter argument to that might be that, okay, Bitcoin miners themselves are not very efficient generators of heat when it comes to things like heat pumps. Who wants to take the counter argument against that one? Don't be shy. Amos?
Yeah,
You're on mute. Sorry.
I'm happy to pass it to one of the other folks.
Thomas?
Yeah, I can go. Yeah, so I guess one counter argument would be that the heat generated from Bitcoin mining is like it's like a surplus. It's not necessarily the thing that you're aiming for, right? So in the first place, it's the hashes that you really want, and then the heat generated from that is just a bonus on top of that. So that's, to me, that's one of the strongest arguments for that. Also, there's also like a lot of places. It really depends on the local infrastructure of the district heating. I know some warehouses in Norway where they don't really have access to other things than Bitcoin or like to electricity generated heat, right? And in those places that they've set up Bitcoin mining.
Can I supplement Thomas with just...
You can. There's 30 seconds more, so you can go for it.
30 seconds, okay. So I can't remember specifics, but I have read of use cases where AI data centers are being used for heating as well. So sure, that might not be as efficient as heat pumps, but I agree with Thomas. If you have a function which you think is useful for society, so we'd all agree that AI is useful for society, so why wouldn't you use the byproduct? If someone thinks that Bitcoin is useless, then, I'm not suggesting anyone thinks that, but if that were the case, then you could see why they would say, what's the point in using it for heating then? Because it's a useless thing doing something that's inefficient. But you wouldn't apply that to AI, because AI we would mostly agree is useful. So if you think Bitcoin's useless, I guess it's understandable you'd think the heating element is also not worth the time.
I guess that's at the essence of this, right? Is if it really is indeed a byproduct of a otherwise useful function versus just the primary product being heat. Let's jump to the next question. Unless, Alex, did you have anything you wanted to add on top?
No, not necessarily. I have a very pragmatic answer to that. Basically, if you think about at home machines, just do the math. Does it make sense over the lifetime of the machine to buy a heat pump or to buy this kind of mining device? And actually, you can't do this perfectly, right? Because there's a lot of things you need to consider, difficulty, Bitcoin price and whatnot. But ultimately, I think it's more this is kind of my pragmatic answer. One of a funny example that goes back a long time is when I saw, it was in 2020, a YouTube video about in Siberia. It's called a Bitcoin babushkas, where actually this Russian grandmas were mining Bitcoin with some S9, and heating their house, which is not very... It was really great, right? Because they did it without any sort of noise protection. So you have this 90 decibel thing. Yeah, exactly. There was a cat and it was really disturbed. So I would not recommend to do that. But it's basically, you saw, I think in areas where, and I think Thomas mentioned that, where basically possibly the public infrastructure is not as well developed, and it's cold, you might actually do that. And I think, I'm not quite sure if it's still on YouTube, but it was kind of a funny video to watch.
I'll have to check that out, Bitcoin babushka. And that's a really good practical answer. I mean, just saying, the economics speak for themselves, right? I guess if you're actually looking at the value generated with Bitcoin, the cost of the heat on both sides, I think that would be the more practical deciding decision. Let's jump to the next one. So this one's a little bit more, it's a bit out there, but in some applications, Bitcoin mining can be done where there is gas that would otherwise be flared from oil wells, for example. So that gas can then be, captured, compressed, put through a gas turbine, and then converted to electricity. And electricity there can be used to mine Bitcoin. So an argument from an environmentalist might say, okay, is this not then subsidizing the fossil fuel industry by giving them an additional economic incentive, an additional value stream from the natural gas? So does natural gas become more competitive vis-a-vis renewables? Who wants to take this one first?
I can give a quick fire initial response. So I found that really quite thought-provoking criticism of the article, which I'd not thought of, and I think there's genuine validity there. The dilemma almost is if you're trying to transition away from fossil fuels, which my proposition would be that Bitcoin helps that, then conversely with flared gas, you're actually keeping it alive for longer. I think it's a good, valid point. I certainly think that in the short to medium term, methane gas is so much more dangerous than carbon dioxide. I think over a 20-year period, it's 80 to 85% more potent than CO2. So any carbon methane negative consumption of electricity, that is consumption which reduces the amount of carbon dioxide or methane being pumped into the atmosphere, is a good thing in the short medium term as we transition to more renewables. I think there's various countries, I'm sure I'm going to get fact checked about it. I think there's about 150 countries in the world that have signed up to the methane pledge. So that's a pledge to reduce methane by 30% from 2020 levels by 2030. And not a lot has been done about methane. CO2 seems to get all of the attention. So for countries that are looking to make a quick and meaningful difference to their methane emissions, this is a very quick way to do it.
Yeah, I think that sums it up quite well. If it's otherwise venting methane, then certainly combusting it is much better. If it's already being flared, being combusted, then I guess the argument's a little bit different. But I think that's good. Just for the sake of time, we'll just jump to the one last question, and then we'll have to sign off for the night. Hope to have all of you guys back again, where we can go into other topics together. But for today, the last one we'll end on is the discussion on e-waste. So all these ASIC chips that are used, they become obsolete after a number of years. There's more and more ASICs being generated year over year and employed year over year. So this obsolescence factor can become a bit of an environmental negative impact. Any perspectives on the argument here towards the disposability of old chips?
Can say a couple of words. So basically, in our kind of last study, we collected some data that helped us a bit understand the scope of e-waste, and I think what we found was like 2.3 kilotons. So it's basically mostly those devices find if they for instance are used by, let's say, a large public mining company, right? They might run more efficient devices, but it's very likely that those devices are not then thrown in the dumpster. There is actually another use case somewhere else in the world. And so what we're trying to find out in this year's report actually is a bit about the actual life cycle of, for instance, like air-cooled, liquid-cooled, or immersion-cooled kind of devices. I mean, ultimately, it's it is basically an economic activity, and it produces waste. The waste is, in terms of the size, I'm not quite sure how to frame, but it is basically what it is. Not like it's not gonna be, it's kind of not completely trashing the entire planet. So it is kind of an economic activity that produces some sort of waste. And I think there is a lot of interest in recycling as well, because ultimately those materials are valuable, right? You have all kinds of aluminum and all these kind of things in there. So I would actually expect that, for instance, when we see, and I hope we get a bit more data on this as well. There's not really data out there on this, right? So it's basically still a lot of assumptions, etc. But I hope we get better data. But I think recycling, and that's because ultimately it's all valuable materials. So I would assume that in particular those companies that are publicly listed or have some sort of board that is more conscious towards the environmental side, to say, hey, can we find some sort of solutions with a recycling company? Because most likely they would actually be quite keen to take these devices, and then if they can keep the resources that you get out of that. But again, I don't really have data to back any of this up, besides basically that we estimate about like 2.3 kilotons currently is and just a bit above 10% is actually thrown away when the rest is repurposed from the AC.
Yeah, really interesting. I'd be interested to see what your study finds this year as you elaborate a bit more on that. I would also imagine that whatever Bitcoin miners produce in terms of e-waste is probably going to be dwarfed by the hyperscalers in the AI space. And I guess, I could imagine there's also a business model that arises around the recycling of these chips if the market becomes large enough. Unfortunately, we're out of time. This has been a really great discussion. I really appreciate you guys all joining the panel tonight, spending your evenings with us. With that, any last closing words from the panel?
It's been fun, Ted. Thank you for having us. Also, thank you to those who gave me feedback on my paper if they're watching this. Thank you. You made the podcast, so thank you very much.
Thank you, Ted, for mine.
Fantastic. So I'll make sure I provide in the description links to the most recent Cambridge report from Alex, Amos's paper as well. And with that, please like and subscribe and share this video with anybody you think might find it interesting, and hope to see you all in the next episode.